Welcome to Middle Class Matters. The further update on the Supreme Court Committee report on Adani issue will be discussed in part 4, that is on 9th June 2023. Point number 38. Finally, SEBI has also presented a comparison of the volatility index data for India as compared with the CBOE VIX for the period between January 2020 and April 18, 2023. It can be seen that except for few weeks after the outbreak of COVID-19, Indian VIX has been consistently lower than CBOE VIX, including in the post-Hindenburg report period. AMFI's input on volatility. Point number 40. The Association of Mutual Funds of India, AMFI, made an interesting point. Close to 200 companies are traded in both the cash segment of the capital market as also the derivative segment, enabling trades in futures and options in them on a daily basis. Market players comprising day traders who square off the trades within a trading day, along with institutional participants, contribute to volume and provide buy and sell liquidity to stocks in both segments of the market. Point number 43. AMFI's representative attributed to the recent volatility in the market largely to news flows on monetary transactions by global central banks, that is the US Federal Reserve in particular, slowdown in the global economy and events such as Hindenburg report. Most of the 44, point number 44, most of the hedge funds do not trade in derivatives in India and they trade instead in the Nifty 50 derivatives on the stock exchange in Singapore. The recent market volatility can also be attributed to sovereign funds, quasi-sovereign funds and pension funds selling stocks purely on the basis of their mandates around environment and governance issues. Such sales are affected without looking at the stock price or valuations. Point number 45. It was found that 4 of the larger Adani Group companies are in the F&O segment. They were observed to have middle of the range volatility as well as impact cost. This is despite the observation that floating stock is low in these companies on account of promoter holding being high at around 57 to 73%. Committee's conclusions. Point number 46. Taking into account the foregoing factual backdrop, the committee returns the following findings. A. Volatility is not an inherent vice for the market. As market participants buy and sell securities, placing buy and sell orders in line with the demand and supply, they do so based on their assessment and expectations, which is in turn based on their assessment of information available to them and its anticipated impact. B. The price discovery in individual stocks would be informed by the events that transpire in connection with such individual stocks. The cumulative effect across stocks and the impact on price would lead to assessment of movements and volatility of the market. C. The Indian market in general was not unduly volatile as is seen in comparison of the Indian Volatility Index India VIX with the CBOE Volatility Index CBOE VIX. D. There was certainly high volatility in the Adani stocks after publication of the Hindenburg report, with the market's expectations from and confidence in the Adani group being shaken by the allegations in the Hindenburg report. E. While the Hindenburg report called for a probe and was inferential based on publicly available information, it presented together a formulation that questioned the fundamental premises on which the market priced Adani stocks. F. The intense adverse impact on Adani stock prices stood mitigated with measures such as the Adani Group promoters paring down the debt raised, secured by encumbrances on their shareholding, and infusion of fresh investment into Adani stocks by way of purchase of shares worth nearly USD 2 billion by a private equity investor from the promoters of the Adani Group. G. The market has repriced and reassessed the Adani stocks, and while they may not have returned to the pre-January 24-23 levels, they are stable at the newly repriced levels. H. Empirical data that shows that retail investors' exposure to the Adani stock has increased would point to the fact that investors and the market do make their own informed decisions, and a fall in the price led to more capital decisions, including for retail investors coming into ownership of these stocks at a repriced levels. 47. SEBI has submitted that only recently it has made a regulatory intervention in terms of supervising the construction of stock indices. SEBI must consider directing index writers to construct indices to compute volatility of stocks that are constituents of indices, so that volatility in these stocks can be paired with volatility in the indices. The availability of such data on a real-time basis would enable the market to be more informed in making its investment and disinvestment decisions. SEBI must ensure that there are secular norms and periodic reviews for construction and design changes in indices. Chapter number 3, Investor Awareness. At the heart of any efficient market is the ability for market players to make informed investment decisions. Point number 2, informed investment decisions not only means investors making informed decisions on whether to buy or sell or to refrain from doing either, but also brings within its remit awareness of the ecosystem and the attendant risk, rewards, rules and regulations. Point number 5, investor education would need to cover 3 broad areas. Education of the lay investor, who is primarily investing in stocks to hold them for a longer period. B. Investors coming into the market through the mutual fund route. And C. Investor operating in the F&O segment who are primarily day traders. Point number 9. SEBI has identified areas that need attention and their plan to address these areas. The committee agrees with steps outlined by SEBI and suggests implementation of these as early as possible in a time-bound manner. SEBI study on individual traders. Point number 10. SEBI submitted that Indian investors are seen to be active in trading stocks, that is buying and selling, as well as investing, holding on without reversing a trade. Point number 11. The following findings were presented by SEBI as being the salient features of the report. A. Out of the total trading by individuals in the cash segment, approximately 67 by value is by way of intra-trade trades, and only 33% results in delivery of shares. B. Total number of unique traders who traded through the top 10 brokers in equity F&O segment has increased by over 500% in financial year 2022 as compared to financial year 2019. C. Approximately 88% of the individual traders were active traders. D. 89% of the individual traders, that is 9 out of 10 individual traders in equity F&O segment, incurred losses with an average loss of rupees 1.1 lakh during financial year 2022. And E. Despite such losses, share of individuals in total F&O turnover is very high. During the last 4 years, it has been around 27 to 29%. Please like the video, subscribe to the channel, give your comments. Thanks for watching.